Hey, it's Dave Knight from 123daytrade.com. Thanks for watching. Thanks for being here. Um, I want to go over money management and risk management on this video, and you can tell I don't have any charts in front of you because we're not going to be dealing with charts, because I believe the most important component of your overall trading strategy that you need to develop and need to understand is your risk management, and secondly would be trade management, and then third would be money management. But if I had to rank them, I would say money management is number one, risk management is number two, and they're very close to being number one, number two. In fact, you can think of risk management as number one, money management as number two, and trade management as number three. So being in a trade is all, fine and dandy, and all that bells and whistles and all that good stuff that goes on. That's the exciting part of trading, is to be in the trade itself, so the trade management. But it's behind the scenes that most of the work is done in your trading plan, or your trading strategy in this case. It's how you approach each trade, how much you're willing to risk per trade, how much are you willing to allow that market to go against you before you're going to get out of it, and then flip side of that, how much you're willing to take out of the market on your winning trades when you do have them, and you're going to have them. And when I look over my last 4 days of live funded trading here at Top Step Trader, I'm down $29. I was up as high. I don't know. Let me pull this up. I don't know if you can see this. I just drew a quick equity curve on a piece of paper, so hopefully you can see that. So I went as high as 505, 515, I think 515, 510, that area. And now after commission cost, I'm down 29 bucks after 4 trading days. So the first day I was up 25 ticks. The next day I was up 29. And then day 3 I lost 28, and day 4, being today, I lost 21. Today was one of those days where I thought the market was going to zoom up over $50 a barrel, and it was going to go flying up to around R2 today, which was around 50, 55. And damn if it didn't just stop on 50, even on the August contract, and just stop. And then it traded off. Hey, one of the valuable things I learned from today, since I don't really trade the afternoons normally, is that when I went back and looked, it seems like the last 30 minutes to last 20 minutes are from 1 p.m. to 1:30 Central Standard Time, is perhaps a really good time to be looking at an afternoon session trade. I missed the morning session. I had some appointments to attend to in the morning. So I thought I would hit the afternoon, and I really believed the market was going to break through the $50 a barrel, and it went up to 50, and then it stopped. And now I don't know where it is trading right now, but I'm talking about around the 1:30 p.m. Central Standard Time. My last trade, I look at today, I lost 10, lost 9, lost 6, lost 8, and then I won 12. So down 21 on 5 trades. In 4 to 5 trades is where I want to be maximum in any given day. And those are usually not good trading days for me when I'm trading 5 contracts, or 5 different times during a day, not 5 contracts. So I only trade 1 contract at a time in the Top Step Trader. My goal right now, as I look at my overall goal, obviously 4 days in, I have 6 days to get well above the 0 line right now, or go after 9 days of trading. I got to go back into redevelopment, into the combine, get through that, and then go back to it. And that might happen. I don't know. I mean, trading is about breaks at sometimes, and a little bit of luck. I mean, you're trading your strategy, but just because you have, my win-loss rate, I only make, I would say about 30 to 40% of the time I actually catch a winning trade. I don't catch the winning trade very often because I have a very tight stop on the market. Today I might have been a little bit on the too tight area, is it moved. I was looking at a stop at 65 and looked like 64 of a 2/3 stop would have been a better, or 63. You know, and I think during the afternoon session it went down to a low of 49.61, and then it went up from there. You know, those are the kind of things that you're going to have some issues with your trading decisions, like how far. And even to this day, you know, I debate about, you know, I know that I don't want to take any more than a -20 or minus $200 on any given trade, but I really don't want to take anything less, anything more than 10 ticks on any given trade. I really want to stay away from uh, times that I'm looking at 12 and 13 ticks right now, because frankly, 3 losses in a row at -12 puts you at -36, where 3 losses in a row at -10 puts you at -30. That's 6 ticks. Could be the difference, and a lot of times is a difference between having a winning day or a break-even day or a losing day overall, because you just don't have enough oomph left in the market to make up the trading loss that you have. And you know, frankly, I'm always looking for at least a 2p on any trade. And if you look at today, you know, and that's right in this area right here. If I get my screen draw tool, you know, today I was looking at 45 ticks, and you know, the market ends up at the open today. It trades up a little bit, and then it comes down a little bit, and then it trades around this area pretty much, goes up to $50 a barrel, and then comes off of it a little bit. So that's the day in the session. The session didn't really do much of anything. It was a pretty tight range as that goes. And when I was looking at the market, you know, maybe I should have stayed away from the trading, but you know, I'm trying to trade every day. That you know, if I'm going to be involved as a day trader, then I believe that there's at least one good trade in any given day. So you know, maybe I'll revamp and rethink that as time goes on. But you know, I believe that like last week, the best trading days were going to be Wednesday and Thursday, and I believe this week's best trading days will be, well, I really believe after Brexit is out, we'll have a good trading day. That will be Friday. And then there's going to be a lot of speculation on Thursday. It might be a good day to stay away. Tuesday and Wednesday of this week, Wednesday being the inventory trade. But all right, so I got off on the tangent, and you know that if you know me by now, if you've watched anything that I do, you know I get out on tangents, and that's the ADD that I have, and that's just the way it is. It's tough luck, you know. Anyway, so, and that's also makes it good for me as a trader, though. You know, maybe that's not good, maybe it's, but to know that I can forget a bad trading day and the next day is a brand new trading day, that's a bonus. And it's taken me a while to get to that point, but you got to let the past be the past, and the future is going to be the future no matter what you do. So my best advice to you is carpe diem, right? Seize the day, Latin for seize the day. Seize the opportunity that's in front of you. The only thing that you can control in your trading is the present. You can't control what's going to happen in the future. You can't, well, you couldn't control what happened in the past. You can't go back there and change any of that. So, you know, why worry with it? You know, the Bible says, one of the greatest verses in the Bible says not to worry. You know, look at Solomon and all his splendor. He couldn't do a damn thing about all that stuff, you know. So do not worry, because there's enough trouble in the day, right? There's a lot of wisdom in that particular scripture. And I don't want to get on a religious kick, because, you know, I mean, I'm just, you know, that's like a proverb. There's some things out there that are smart, you know, and the Bible has a lot of wisdom in it, and so does a lot of books. You know, Buddha, if you read any of his stuff, I mean, there's a lot of wisdom in that. There's a lot of wisdom in the Hindu religion. There's a lot of wisdom in even Islam, you know. Not that I would say that that's a good or bad thing. That's just, you know, religion as a whole. I mean, even atheism has its bonuses in the sense that it has some things that they're positive, and I would never. Well, and that's kind of the cool thing about trading, I guess. It doesn't matter your race, color, religion, your background, what you came from. You know, it really comes down to how can you handle losses. How do you, because you're going, this is not school. You're going to get schooled, but this is not school. This isn't spit out the information and regurgitate it. This isn't the A student gets the A. I mean, the A student, a lot of times as a trader, is the F person that just blows his account out. Along those lines, I was watching a movie on Netflix called Kid Poker with Daniel, can't make the dude's last name, but you know, what was interesting about him is he has a similar story as most traders do, is I would say 95% that admit to it, that most of us fail before we ever make any success in the market. And you listen to him talk about him flying to Vegas, you know, he blows his $3,000 bankroll out like 5 or 6 times before he finally was able to build up a little bit. And even after he built up a little bit, he got into a cash game and then blew all that too as well. I mean, you know, we're talking about a guy that is pretty damn good in math, and still now he's won a bunch of different things as time went on, and he's won multi-million-dollar tournaments. But you know, even he struggled to start with, and all of us struggle. You know, and when you look back at that, it really comes down to, and I would bet he would even tell you that it comes down to, and eventually it came down to him managing his money, or the risk management component. Yeah, he knew all the odds, and yes, he knew all this, that, and the other. But you know, when you get in, I guess the best example that I can think of is around this area. There, the Catholics have these fairs that they put up, the Catholic religion, and they do these little fairs. And these old guys will sit at the card table and poker table, and the young guy will come down with a $50 bankroll and sit down in front of it, and they just pretty much clean that person out. Why do they clean that person out? Well, if you've been in that situation, you know why. I mean, the old men are sitting around with a couple $1,000s of a bankroll at any given day, and they look at that as a fish that's coming down, and they're just going to wipe him out. So they raise him to, he has to go pretty much all in on one hand, and a coin flip to worse in this situation. Most likely he's got a really bad set of cards that he's raising himself on, and then he loses that capital, and he has to get up and walk away. Why? Because I was one of those guys that ended up doing that. Now, there's a lot of reasons. When I was a young guy, you know, I was one of those guys that sat down with $50 and lost it. So money management, I guess that's the key component that I really wanted to talk about today. And when I think about it, I look at it as a starting account balance. So starting trading account balance. And now you can see that I put up 2,500. Now you start with a 0 balance at Top Step Trader. So when I think about my money management, what I want to do is build my account up to a certain level, and then I want to withdraw the money. So what I'm looking at right now is the first. Now, if I had this is probably a better way of thinking about it. Let's say, well, in fact, let's go with 5,000, because that's what most people start with when they open up their futures account. So you have a $5,000 futures account, and your first overall goal is to get 1/2 of your gains to build this account. So my humble opinion, that means that you need, on a $5,000 account, you want to get $2,500 in a gain. So in other words, you have $7,500 or $7,500 in your trading account before you take out your first withdrawal. Jesse Livermore would tell you right off the bat, the only money that's safe in the market is money that you pull out of that market. Now you see on the side over here, let me get my screen drop tool again. Now, you know, if you've watched anything from me, this is free. This tab I've got, if you go into 1-2-3 day trade, this little spreadsheet that I have in front of you, I've got a download that you can get and pick it up, and then you can manipulate it if you want, or whatever. But so what does all this mean? 1/2 of TA gain back to TA, 1/2 of TA gain to bank, 1/2 to reserve, 1/2 to spend. I mean, what the hell am I talking about? So you see that we have a gain of 2,500, right? and then you notice that I have 1,250 and 1,250 over here. This 1,250 ends up being your new account start balance, right? You had account balance of 7,500. You're withdrawing 1.25K on this $5,000. And of this amount, what I would recommend that you're doing is you're taking 50% and putting that into the reserve, and the other 50% is your money to do with whatever you want with it. So this is your money, so it's your dollars. And that's how, and then if you look at this case, it's $625 that you're putting back into reserve, and $625 that you're putting in, that you basically can do whatever you want with it. Risk management is the component of this, and you know what I want to tell you when I'm thinking about it is, if you're willing to risk 10 ticks on any given trade, well, then you got to be willing to take at least 20 ticks out of the market on the win side. So that's at a minimum. In other words, you need to be sitting at a 2-to-1 profit to loss ratio before on any given trade. So you want to make sure that you are taking out 2 times more than what you're willing to lose on any given trade. So you can see in that example, if you had 3 trades and each one of them lost, the first 2 lost 10, the second lost 10, and the third one won 20, now you're at break even. So you're at +0. So this is where you need to add more to this component of the 20. So maybe your win ends up being 25 ticks as opposed to 20. So that's where you get, so in other words, you net out 5 ticks more than you're willing to lose, and then you cover your commission costs, you cover your trading. Now, it doesn't really make a lot of sense when you're trading 1 contract, but when you're trading 10 contracts, all of a sudden that $5 gain on or a $50 gain on 10 contracts is all of a sudden that's $500, so that $50 on 1 and $500 on 10, eventually it starts to make sense. As you're moving down this area, you're increasing your leverage and you're increasing your contract size. So you have to have a plan for all this, and I highly recommend that you're starting with 1 contract, and then like when I look at my particular situation, let me go back to if I look back at the table and the graph, maybe it works out to, your starting equity is 5,000. And today is, let's just say it was 6/01/2016, and your margin is 500, the delta is 500, your max daily drawdown is 500, your trading goal per week is 250. Who knows what that all means, but this could be an area that you're looking to increase. Like, once I get to 6,500 in my account after withdrawals, I'm looking to go trade an extra contract, or when I get 25,000 in my account, now I'm trading 10 contracts. Maybe I've got a 0.5 delta here, and I have a 0.5 delta here. So all of a sudden, all this changes around, right? So, how many weeks does it take to get to the next level? If I've got a delta of 250 and I'm trading this, this is all what, what's my max drawdown that I'm willing to risk? What is my max delta? You can change around all of the margin requirements and what you need to have before you move forward to the next level of how long is it going to take to basically get to where I need to be. Um, and then, like, in this particular example, let's say that, I got to 62.50. So then all of a sudden, I still want to be trading one contract. Where do I need to go, to be the next time at this, and maybe I'm at one on the delta factor across the board here. So, which is pretty much where you need to be to start with. So in other words, you look at your 10 contracts, and all of a sudden, at around 73,000 to 88,000, once you reach that, then you're able to trade 10 contracts. So this is just an example, but how long is it going to take to be able, and you're looking at your stab, how long is it going to take to get to that $74,000-$5,000? Right now, you're looking at it, it's going to be right in this area right here on stab 11 or stab 12, but you've already taken out a lot of money along the way. So in other words, if I look at this and I sum it up, now you see how much money you pulled out of the market right here. So just on this 5,000 starting account balance, all of a sudden you're looking at, wow, I pulled almost $34,000 out of the market. That's the money, like Jesse Livermore says, the only money that's safe in trading is the money that you pull out. So, and you put in the other half of that, so you're putting another $35,000 over into a reserve account just in case something goes wrong. You got that other money sitting around just waiting. And at some point you want to say that's enough in my trading account, in my futures account, in case that company goes belly up, you've got, you know that you can rebuild your trading account. And the SCMs all of a sudden, go out of business, and we've seen it happen. If you've been around trading a long time, you know that IBs and FCMs and even the best ones sometimes get into some financial difficulties. So knowing that you have a plan for even that, so that's kind of important too in your money management strategy. And that's why I would, I recommend having that reserve sitting back. That it's just sitting there just in case shit happens, right? And you're taking care of every particular thing that I can think of as far as, because the only thing, as long as you have your knowledge and you have a little bit of money, you can make it, and even if you don't have money, you can go in where I am, like at Top Step
Here we
Trader,
go for the
and
final countdown here. We've got about 7 minutes to the cash close. And
okay,
let's just kind of go over.
Close that up. You can end up, making yourself a livelihood. It doesn't. This is a rocket science. So it's basically what I said right here. Get money out of market and get it into your bank account. And putting that money in the reserve account. Putting money in your save. Putting money away in each area that you have right now. In fact, I think this was my last. Yeah, that was my last last funded account that I had, and I only got up to what high at 225, and I wasn't able to break it out. So if I look at this, maybe this is a good experience right now, so you can see it. So now on day one, I was up 235. On day two, I was up. I made it to 505, 510, excuse me. So. Minus, just give me a second here, I have to figure this out. So I ended up 275 on that day, up 510. Let me change the date here. That would have been, I started trading on 6/15. And then 6/16. 6/17. 6/20, which is the first day of summer. And let's just copy this down here to That'll be Friday the 24th. All right. So what I don't know is this one. 1, 2, 3. Okay, I lost. I was down to 205 yesterday or Friday. 510. This was a mistake. Day I wished I never traded. 305. Today I lost 21 ticks overall on 5 trades. Times 10 plus 20. It's around another 235. And then I don't know this yet. So I'm down roughly 30 bucks. So here I am, and of course I can add to this, right? So, and I want to have 10 trading days. So, bring this down a little bit, and then I take this into account. Now I've got my 10 trading days sitting out here, and so let's say that my next trading session I get 150, and then I take a loss of 75, and then I get lucky and I hit $750 win day, which is what happens a lot of times. And then I lose 350 of it, and then I get a $500 trading day. And then I end up getting 2 days in a row that I get another $500 trading day, let's say. So you can see that you can build up your trading equity in a quick amount of time as it relates to your trading and how you view the markets. And and of course this example can go on and on and on. And the fact the 24th would be the 27th, 26th. So this day would be the 27th, and this day would be the 28th. So here all of a sudden you've got, and let's say, next couple of days you give back some of those gains. And that's kind of the way trading works. You have your peak, you have your valley, and you're trying to eventually get that equity curve to continue to make that move, on up and up and up. And it's tough because at some point you're sitting at that zero line, and when it comes and you're thinking, your confidence level gets hit a little bit after you take, like, for instance, my confidence level is a little bit less than so then the 2 winning days, and then I'm thinking, I'm on top of the world when I'm up 510. Now I had a swing. They went down up 510 to down 30. So I've made my last swing up 510, down $540. So now I'm looking at my next swing to get up above the 510 level. Like I said right here, around the 800 mark, and then who knows what the equity is going to do, but that is typical of a trading account. You have, if you're controlling your risk properly, you should be taking out less on your trading loss days than you do on your trading wins. Now, what I've found myself doing in this particular live funded account here at Top Step Trader is my winning days, I lost 2 and then won the third. That happened on Wednesday. That happened on Thursday. On Friday, I wasn't able to catch that. And then today being Monday, I had 3 losses and 2 break-even trade, or three losses, 1 break-even, and 1 win on the day, pretty much. And I was down 21 ticks overall. So I haven't had anything phenomenal in my account, and I'm looking for that $1,000 winning day and $750 winning day, $800 winning day. Those are days that I know that will come in my trading account on one contract. I just got to be persistent as I approach the markets. And when I get to the level that I'm looking for, in this case, I'm looking for the $2,500 level. Let me pull this back so you see what I'm talking about. So I'm looking at 2,500. Once my account balance gets there, I want to pull $500 out my first time and then I'm going to start with a trading account balance of 2,000. Now, if I get to 3,000 on, and I get lucky enough, it goes from say 20, maybe that 2,500 is 2,750. So in other words, I'm going to pull $750 out, up to $1,000 if I get lucky enough to get it up to 3,000. Then I'm going to pull 1,000 out, and I'm going to start my next stab. In this case, is starting at 2,000. Now you can see what I'm planning on doing right now on my trading account. I'm looking to take the account up to $3,000. And then I'm going to withdraw $625. And then you can see the next balance, excuse me, that's not true. I'm going to withdraw $500 again. So let's say I get 500 out the first time, and then I'm going to take out 500 the next time. So that's kind of the goal right now. So I'll have like 1K minimum withdrawal up to, if I get lucky enough to have that, say 3,000. Then I'll have 1,000 on my first withdrawal and 500 on the second. So I'll have somewhere between 1.5K coming out to 1K coming out of the market, and that's money that's mine. That's money that's coming out of the market that I'm physically taking out of the market. And in Top Step Trader, you get the first 5,000 is your money. So that's going to be 100% mine up until I get 5,000 out. So this is my overall goal: to get it to 2,000, to get to 2,500 to 3,000, and then get the account and then take the withdrawal. And my next level to go 2,000 up to 3,000, and you see that I'm starting stab 2 at 2,500, which this is where it gets interesting, right? So 2,500, and then after that, 3,125, and then 3,906. Well, roughly, that's going to be around 4K. I can tell you that right now. That 3,906 is going to be between 3.9 to 4K when I start that particular balance. And then you see 4882, so you're closing in on 5,000 here, and then you're at 6,000. At some point in this level, right in this area, I'm going to ask TST, once I get up over this level, if I can move my $5 max daily drawdown from 5, I want to increase my contract size and go to 2, that I want that to be higher. So, so I can have more staying power in the market. And then if it falls to a certain level, say it goes back to 31.25 or something, then I'm going back down to 1 contract. So, so somewhere around the 4 to the 6,000 level, I want to be able to trade 2 contracts. So, and then I want to, and I do have a plan. I got a plan to add all the way up to 10 contracts. Now, will I be a Top Step Trader when I'm trading 10 contracts? I don't know. It depends on how they work with me in the future. I right now I can tell you that I love being with them, and I want to stay with them, and I want to continue to grow this relationship. I like being able to trade other people's money, in this case not my own, and then pull out of my wins, and I'm fine with them getting 20% of my overall gains, because and eventually when if I'm down here at stab 10 and I've got a $14,000, almost $15,000 account, yeah, sure, I'm pulling out so I'm pulling out roughly $7,500, which is the gain is $7,500. I'm pulling out $3,700. So you're thinking, well, that could be 100% mine, but $3,700, I'm getting 80% of that now. So that's still a good amount of money, almost $3,000 pulled out, and giving them the privilege of letting me trade with them, paying them as well, and that's kind of cool. They, the 20%, them taking out 20% on your win side, that goes back to, I guess, the old money management where it was 10 and 5, was it 2 and 20? I guess is the old rule that used to be 2% and then 20% or some kind of the CTAs that used to run, the commodity trading advisors that used to run out there. So in fact, they're I guess a CTA in that case, that they're running a pool and they're taking a portion of the pool to their own level. What can I do? There's all kinds of things that you can do, uh, but what I know is that that's the money that I pull out is my money. And that, in fact, all of that money is my money at that point. If I would say, I'm done trading, and my balance is sitting at 14,901, and I'm done. Well, and I say at that point I want it all, then I get 80% of that account, and they get the other 20% of the account. So, you know, um, at some point maybe it makes sense to do that, or you're pulling it all out, and then and then you do whatever you want at that point. You open up your own futures account, you're negotiating your own deals. You've got your own ball, therefore you're making your own rules. Maybe they negotiate with you and say, instead of taking 20% out, we really like you, we'll only take 10% out. There's all kinds of things that can go on as it relates to trading, and how it relates to the ones that they want to keep around. They're gonna cater with them. At least that's how I foresee it happening. And but anyway, what I know is I have 6 more trading days left. I'm going to take that back. I got 5 more trading days left, and by day 9, before I trade day 10, I have to make a decision. Do I go back into the combine and have to pass that again because I didn't get the breakout trade that I'm looking for? And I'm a breakout trader, in the way that I look at it. And I know that I will find that breakout trade, but does it happen within a 9 trading day period of time? Most of the times, I would say the answer to that question is yes, but sometimes it just doesn't happen, and you have to regroup, replan, and then work your way back through it and out of it. So I'm hoping, and my wish is, on this particular funded account that I'm in, that after 9 trading days, I'm up over $1,000 to $2,000 on the account. And maybe this week, in the Brexit trade that comes out on England, the England making up their mind if they're going to stay in the EU or not, or maybe Wednesday when the crude oil inventory report comes out, maybe that is the breakout trade that I get that goes for 70, 80, 90 ticks. Who knows? You just never know when you're going to get that breakout trade. But what I know is that's the kind of trader that I am, and I know that I'm going to catch them because I plan for it. I'm looking at a 3P or a 4P or a 6P target in any given trading day. I'm never and the minimum I'm looking for is a 1P trading target. So like for today, if I look at what I was willing to do, I was willing to risk 10 ticks up against 23 on a win side. So that would be my minimum. And in fact, if I would have taken 2 losses today and got that third, if I only had 3 trades today, I could have made this a positive trading day. I would have been down 20 ticks, up 23, take away commission cost of 15, and I'm up $15. So that is, that is the way to trade. So in this case, I'm only winning 33% of the time or less, and I can still, in fact, if you do it right, you can win only 1 out of 5 trades, and still, in other words, 20% of your wins, and still make it as a trader. That's the crazy thing about trading. So if you can work your way into taking more away from the market. So as I wrap up this particular soapbox talk, kitchen sink, 2 cents worth of whatever that I want to talk about here, what I know is that you can make it as a trader. By the way, don't look at anything that's beyond the screen that's in front of you on this corner, because a lot of this stuff is, this is pretty much all that you need to be concerning yourself with, is this little area right here on your R&P, risk against profit. All this other stuff down here is, it's just stuff that I trade and work with and decide what I want to do. to your heart's content, you can work your spreadsheet out, right? But what I know is this particular part of the trading strategy right here will tell me what I need to do. In fact, all I need to know, and a lot of times, is where is the market trading, where has it opened up at, and then, in fact, if I look at today's open and know where it was at any point in time. So if I look at today, I know that it opened at 49.09. We've had a high of 49.90, and we've had a low of 48.72. And right now we're trading at, say, right there, and maybe the market's trading at 49.70. So I know that we've already run a 3P target when I'm looking at my trading. And how far can we go? I mean, on any given day, what I can see is that I believe the market on extreme movement can go 12P. This is what this means to me right now, that the market can run 12P. So if you look at this particular, 49.09 from 51.83, well, there it is right there, 274.5 ticks, 275 ticks. In other words, almost $3,000 of movement, or $3 in this case, or $2.75. Let's get right about it. That's $2.75 of extreme market movement that I believe the market could have run to today, and the top target being around 51.83 based upon an open of 49.09. And on the likewise, like if I'm looking at today, the market could have run down to a low roughly of 46.35. Where am I looking at on the screen? Let me get the screen draw tool. Right here. So I'm looking at that level right here. So an extreme market movement, we go to 51.83, the 46.35. So you can look at right there, that's like almost a $5 difference in where the market could go between high against low. What does the average market move? Well, most time the market on any given move moves what I believe 1P. So, and then today being today, based upon data going back, that meant today that the average market move would move 23 ticks before you would see any retracement in the market. And when you look at my one winning trade that I end up getting, the market moves up and through 49.93. I think I was at 49.71. Yeah, so it moves up through 49.94. It gets up to $50 a barrel, and then it trades off. I don't know what it's trading at right now, but you can see an average market move on a win. You're going to get that 1P move, and if you get lucky enough, you're going to run a 3P target. When I look at a 3P target on today's trading, that I was looking at the 2R being at 50.55. So what I'm getting at, I guess, is that I know where I'm going in any given trade. I'm expecting to pull a lot more away from the market on my wins than I'm ever willing to give up on my losses. So, and taking away, like I look at my trading today, I take a -10, a -9, a -6, a -8, and a +12. That +12 could have easily been a +70 or +80 or a +120 if the market decided. The market will do what the market's going to do, and there's nothing that you can do to control that. All you can do, and I guess this comes back to pushing the lawnmower story. When I thought about this a while ago, maybe about 4, 5, 6, 7, 8 years ago. Who knows? I was mowing. I got a push mower, and it's part of my exercise routine. And I'm pushing the mower around. The only thing at that point that I can control, I can't control if the mower is going to die on me at this point. I can't control if the gas is going to run out, or if the oil or the engine's going to blow up, or the blade's going to stop running, or a rabbit's going to run in front of me. There's a lot of shit that I can't control as a trader, right? The only thing that I can control at that point in time is where I'm pushing that lawnmower for the next 1 to 2 to 3 seconds, right? So I know I'm going this way, or I'm turning, or I'm turning all the way back around, and then I'm going back down the hill, or who knows. So the only thing that I can control as a trader is where I'm pushing that lawnmower in the very, very, extremely, very, very, very near future. But what I do know, and I guess the key point that I want to make on this kitchen sink 2 cents worth of talking to you today is you got to get into a point that you're never going to quit. If you want to make trading your livelihood, if you want to take yourself up from the bootstrap cigarette now to the echelons that you want to be, you've got to take your licks. You're going to take your licks. There's just no way around it. You know that's why I believe I look at Top Step Trader as such a great proving ground for you to build your confidence up. To once you get to that level of where you're trading properly, you are trading their money. You're not trading your money. The pressure is off, to pay this bill or pay that bill or steal from Peter to pay Paul over here. That pressure's off of you. You are trading with their money, and your worst trading day might be that you blow out your funded account and you have to go back to paying, say you have to pay $150 a month on your combine to get yourself back in. Let me tell you something. Well, in fact, let's take it today. Let's look at today. I lost 21 ticks today. So I lost more than a combine on a monthly fee that you have to open up and run the combine on a 30K account at Top Step Trader. I lost 21 ticks. So if I was trading my own account today, I would have been down $210. So I would have already lost more on my account than what Top Step Trader is willing to take in any given 30 days. So I only have to pay like 150 when I'm not in funded account every month. And trust me, paying out $150 is a lot better than losing $500 of your own money and then thinking, oh, I really effed that up now. And then you combine that to your next day where you lose another 500. So in other words, you're down $1,000 where you're in the Top Step Trader, you're only down 150. You're sitting in this proving ground. You're building your trading strategy up. You're building all this money management skill, and you're only down the $150 on the combine cost itself, or maybe you got a practice account and you're it's only $35 at that point. I believe that's what it is now. It's only $35 to have a practice account and have all the live data feed at Top Step Trader. There's no better deal out there that I know of, and the people are awesome at Top Step Trader. And I don't get anything for being and telling you about it, but I don't know. It just and it's tough. Life is tough. Zig Ziglar says it. If it wasn't, life's not easy, and this is not easy. Being a trader and making money in the market is not easy. You question yourself at every step of the way because you have these highs and lows that you're going to. You're trying to stay in this even keel so that each peak, you're going to have a valley. But what you're hoping for is each valley, after you hit the peak, you're rising peak to valley, but your next valley isn't as low as the valley previous to that. So, so that that's how you build your trading account up, and that's how I've always done it since I've been making money as a trader. Wow. I figured I would talk until I heard the garage door open. I knew my kids and wife were coming back from being out and doing some shopping today. I just heard the garage door open down below me. So what I want to do is that was my fireside chat with you today, and we weren't looking at any charts at all. We were just talking one-on-one about how to approach the markets and how you can have, and I believe you can have a trading strategy that only wins 1 out of 4, 1 out of 5 times, and still make it as a trader. Get to me if you want to learn a little bit more about how I approach the markets. I'm going to be offering up a trading course or in a class sometime in I'm in the month of July is what I'm thinking. Probably after the 4th of July, the month of July, where I'm in my slow point, and so somewhere between I would say around after the first week of July, I'm looking at probably around the 11th of July up through August 11th, so a month worth of putting together a course, and I'll go over more details as time goes on about it. But I wanted to talk to you about that today. That's kind of where I'm going with it, and it's not going to be free, but it's not going to be expensive either. I can tell you right off the bat that I know it'll be under $1,000, and I'll have a monthly payment plan, or we'll work something else out, or we'll work something else out. I'm good about that. But it's going to be an intensive 30-day class that we're going to go over a lot of trading details, money management, trade management, risk management. We're really going to hammer in 30-day period of time how to go from point A to point B, and maybe I haven't set the date of when it's going to be, but I definitely want to put out that particular training, and I want to, and it just, the teacher, I think, in some cases, learns a lot more than the student. So another reason that I want to do it is, I want to hear from you guys as well. So, and I learn a lot from listening to you guys, and that's about all I really want to talk about today. I hope that you've gained something from it. If you have, hit that like button down below on the video here on YouTube, and let me know. And this has been quite a long video. If you've made it this far through, or if you skipped all the way to the end, yeah, there's going to be some good stuff coming out. Keep your eyes open on your email that's coming from me at 123. David at 123daytrade.com is where it should be coming from, and keep your eyes on that. We'll be talking to you soon. All right. God bless. Take care, and I'll see you on the next video I put together. Bye for now.